This is the video demonstration on federal income tax withholding. And in this video, I'm going to work the solution for example number 3. The information for example number 3 is included on our course website, and the information is also included in the video. Now in this problem, we're going to actually be calculating the federal income taxes withheld under two different methods. So initially, it says use the percentage method to compute the federal income tax withheld, and then we have about 4 or 5 employees there. And then it says use the wage bracket method to compute the federal income tax withheld, and then we have another series of employees. And for all these employees, we have their name, their marital status, the number of withholding allowances claimed, and their salary information. And notice that all throughout this problem, these employees have different pay periods, and the different pay periods are going to have a big effect on how we solve the problem. Now, we talked about this in the previous video lecture, that there are two different methods of calculating the federal income tax withheld. So initially we'll use percentage method, and then we'll use wage bracket method. And throughout this video, as we solve this particular example, it's going to show you the differences between these two methods. Now to solve this, I'm going to utilize Excel. And this is the type of problem that you could potentially use Excel to solve it, or when you're doing a problem like this, you could do this on your own paper. And what I've done here is simply taken all the information that I was given at the beginning of the problem and just copied this into my spreadsheet. And that way I don't have to keep flipping back and forth between the information given and the solution. But all I've done here is just put the name of each person, marital status, number of withholdings, the pay period, and the salary information. And like I said, all that was given to me at the beginning of the problem. Now for these initial 5 employees, I'm going to use the percentage method. For the rest of these, I'm going to use wage bracket. Now in order to do that, I'm going to have some information. Now the information that we will use in order to do this, you could find that information in different places. It's actually included in your textbook, but it's also available online. And it's also available on our course website. In fact, there is a document that I've posted to the course website, and I'm going to open this document to show you what this looks like. This is actually from the IRS, and this is the Employer's Tax Guide. So there's all sorts of great information in this document that will help us solve this type of problem. There's a lot of instructions, there's a lot of directions, but really the information that we need begins on page 35. So I'm just going to scroll through this document past all the instructions and go directly to page 35, because that's where the information is that I need to use. And this is just going to help us find all the things that we need. And like I said, this is also available in the book. Now when I get to page 35, there's something right here that I'm very interested in where it says table 5 over here on the right hand side. It says for the percentage method, here is the 2012 amount for one withholding allowance. And notice this, it says payroll period, and they're giving me all the different payroll period options, and for each one of them there's a different withholding allowance. So what that means is I'm going to use a different amount depending on the person's pay period. So for example, I have a person here, the very first person in the problem, M. Akers, marital status married, but right now I'm mostly interested in the pay period. This person has a weekly pay period. So right here for allowance, I need to know the amount for one allowance for weekly pay period. So payroll period weekly, right over here it says one withholding allowance, $73.08. So that's what I'm going to plug in right here. $73.08. That's the value of one withholding allowance for a weekly employee. The next person is a bi-weekly employee. So again, bi-weekly, that's the second line, one withholding allowance, $146.15. So I'll plug that in. The next employee is paid quarterly. So quarterly allowance, it's all the way down here, quarterly. I follow that straight across. The amount is $950. So I'm going to plug in $950 for one withholding allowance. The next employee is paid semi-monthly. So semi-monthly, it's the third one. I follow that over, $158.33. So $158.33 is one withholding allowance for semi-monthly. And then the last person on this first part of the problem is paid monthly. So I want to get the monthly amount. It's the fourth one, $316.67. So all I'm doing there is simply getting the value of one withholding allowance for each one of these people. They all have different pay periods. Now, they all have claimed a different amount of withholding allowances. So I'm going to take the amount of one withholding allowance and multiply that by the number that they've claimed. So like this person, they're entitled to $73.08, but they have claimed 4 withholding allowances. So if I multiply that, that's $292.32. Now this next person has claimed 0. Well, anything times 0 is 0. So nothing to calculate there. The next person, $950, they're claiming 5 allowances. So that's a total of $4,750. The next person, $158.33, they are claiming 8 withholding allowances. That works out to $1,266.64. The next person, $316.67, and they're claiming 3 allowances. So that works out to $950.01. So that's the way I calculate the total allowances that they're claiming. Now, that amount, in order to use the percentage method, is supposed to be deducted from the salary. So I want to take their salary amount and simply deduct the total of the withholding allowances. And I want to repeat that calculation for every individual employee. So it's just the total salary minus the total of the withholding allowances. So what I end up with there is, for the first person, an excess amount $1,317.68. For this person, $825, $4,880, negative $341.64, and $1,924.99. Now this one person who is negative, that basically means they've claimed so many allowances that no tax will be held from their paycheck. So that's good for us. That means that that's one that we actually don't even have to fool with doing the calculations for. So we're only going to have to do the calculations for these other ones. So that's sort of the first step in the percentage process. Now once we get this number, the excess amount, now we actually have to go through the process of actually calculating the tax. Now that's a fairly complex process, and it takes a little time to get used to that, but with practice you'll eventually get used to doing that calculation. Now where's the information that I need for that? Well, going back to my document, like I said, this was my table that I used for my withholding allowances. If I scroll on down, the next 2 pages, this is my information that I need for the percentage method. These are my percentage method tables. Now there's 2 pages. Notice that these tables are organized by pay period: weekly, bi-weekly, semi-monthly, monthly, and so forth. And then the next page, quarterly, semi-annual, annual, daily. So they're organized in that manner. And what that means is, when I do these calculations, I always have to know the person's pay period. And I always have to be very cautious and double check to make sure I'm looking at the correct table. Also notice that each table is divided into 2 halves. The left side is always for a single person. The right side is always for married. So again, one of the confusing things with this type of problem is just simply being very careful, very cautious, make sure that I'm looking in the correct area. because it's so easy to make a mistake and look at the wrong table. So the first person that we're going to do this calculation for is our very first employee, M. Akers. They are married and they are a weekly pay period. And we know the excess amount. We know that is $1,317.68. So I'm going to have to calculate the tax for that person. And what I'll do is I'll go off to the side to do my calculation. And then when I get my calculation, I'll go back and plug that in to this box for tax. So since this person is weekly and married, I want to look at my tables. Now, weekly, that happens to be table 1, weekly payroll period. And this person is married. So to solve this one, I want to look at table 1, part B, the right-hand side for a married person. Now, in this case, this person, we already calculated the excess amount. It was $1,317.68. What I want to do is find the area where that amount falls. It falls into this second area because it's over $490, but it's not over $1,515. So that's the area where that person's excess income falls. So I'm going to follow that across and see what the proper way is to do that calculation. So for this person, it says $33.40, and then it says 15%, and it says the excess above $490. So those are the three things I need to know. $33.40 plus 15% of the excess over $490. So here's how I'm going to use that information. They've got $1,317.68. I want to see how much that exceeds $490. So I can take that amount and deduct $490, and that'll tell me how much it exceeds. Then I'm supposed to multiply that amount by 15%. Well, 15% as a decimal is 0.15. So that amount times 0.15 gives me 124.15. And then I'm supposed to add on an additional 33.40. So then I add the last two numbers together, and I get 157.552. I'll round to the penny and say that it's 157.55. Now, like I said, the first time you do that calculation, I know it's a little bit confusing, but the more times you do this, the more experience you'll have and the easier this becomes, and we're going to do this several more times. But for this person, 157.55. So now I'm going to delete all this, so I'll have room over here to do my calculations.